Welcome back. You're watching The Money Show on ET Now. Today we decided to, talk about another very interesting topic, and that is rental income. Many of you do maybe having that spare, house property that may be lying around. But now, of course, given the fact that we are in the midst of COVID, I'm sure your tenants may have asked for a bit of a breather when it comes to, them paying their rent, or they may have asked you to lower the rent. And in general, the rent market itself may be on the lower side. So as property owners, what are the options before you? How can you, spruce up your property, if you could call it that, so that you can as well demand more rent? Can you maybe change it into what we call as service apartments, which is a bit more niche and, does have potential for higher rent. We'll also be discussing about the latest announcements from the RBI on infusing more liquidity into a national housing, scheme, which, the question it brings is, will that make it easier for you to get a home loan? And we'll also be talking about REITs or REITs, especially given the fact that a lot of them have launched recently. I have with me Anshuman Magazine, the chairman and CEO of CBRE India, Southeast Asia, Middle East and Africa. Anshuman, many thanks for joining us today on The Money Show. To start with, a lot of people have been facing this conundrum where their tenants have been asking them to lower their rent, or, to sort of go a little easy, go flexible on their rent. And I suppose, tenants, landlords as well, don't have much of an option, right? You have to also show that little bit of leniency towards your tenants, because everybody's been facing disruptions. But the question is that if, let's say, even the landlord needs that extra buck to come in, what are the options before him or her? Do you think that the rent market in India today is good enough that, I can confidently say that, no, look, I want to look out for other tenants and I would be able to get a rate as I was getting even pre-COVID?
Well, thanks for having me. Just quickly, right now, of course, everybody knows, thanks to COVID-19, the market is slow. The occupiers, the tenants, really are also finding it difficult to decide, because nobody knows what's going to happen in 6-9 months' time. As far as the landlord is concerned, I think they should really, work with the occupiers, understand their challenges. At the same time, of course, we expect the occupiers to also know that the landlord needs the return, but they should try to reach an understanding, because the risk for a landlord when they let a tenant go is more. That by the time they get a new tenant, you lose few months rental. Plus, you have to also, renegotiate the rent, and the probability of getting a new tenant in these markets are a bit more challenging than in a normal market. So really, a landlord should first and foremost try to hold back the tenant he has. And then they can structure it in many ways. So one is that, okay, these few months are tough. We can look at some rent abatement, but going forward, we want to get back to normal rents. So really, the landlord should be looking at what is his overall return is going to be in next 2 to 3 years time. Because if you let a tenant go and you don't get somebody for 4 months, 5 months, that rental loss, if you calculate, then brings down your average rent anyways. And it may be more than 4 months or 6 months, you will get another occupier. So this is the time to be prudent and work along with the occupier, and hopefully the occupier should also be reasonable. Where in the short term, when the occupier is facing problems, you can structure something which will make it easier for the occupier to continue the tenancy.
Okay, so just sort of be a little more on the patient side, and be a little flexible, work with your tenant as well, because this is not a market where you can, it'll be very easy to go around scouting for new tenants, and that too at good rates. It will be a little difficult. It may take a little time for things to settle down. So go easy on your tenant right now. I think that's largely the advice as well coming in, from Anshuman. Okay. Anshuman, I would like to talk to you then about the options, or rather, if an individual would stand a better chance in, making rejigs to their property, converting it into a commercial property, or even what we call as, service apartments, which are usually then taken by corporates for their for their partners or for their employees, for when their employee has to come and live in a particular city or in your particular city. What are the chances for that? I mean, is sprucing up your apartment to that level an expensive affair?
Well, it depends. First of all, you can't change the usage of property so easily. Of course, if you have a residential, if you're talking about residential property, you can use it for guest house, anything for residential purpose, of course, and mostly it's allowed. In some cases, I must say a colleague of mine, for example, gave his house fully furnished to someone because it provides them better flexibility to come in, and it does not cost as much incremental cost to do a residential fit out to a certain level. Of course, there's no limit to what you can do, but I'm talking about basics, and that does provide a person coming in a flexibility to move in. You can also, there is also co-living opportunities right now, and where you can give it out for or for student housing. So there are various opportunities for residential. Similarly, in commercial space, there are landlords who are tying up with co-working operators for space because it provides flexibility, and and then they can get a rental. Sometimes it's not a rental which is straight rental; it could be percentage of revenue what you're earning, but still there is at least some income instead of just keeping the property vacant. So yes, there are opportunities. Other opportunities to ensure that you can get your property, you could still get some income out of the property.
So maybe converting it into something as fancy as service apartments will require a lot of permissions, but maybe co-living could be, shared accommodation rather, would be another fast-growing segment as well that does help in, getting you that extra buck. Okay, now we also have more liquidity available with NHBs, consequently with housing finance companies as well. Does that mean that today if I want to buy a home and I'm looking for a home loan to help me with that process, it'll be easier and also cheaper, in fact, to get a home loan?
Yeah, home loans have already come down. And interestingly, there are many mortgage, residential mortgage institutions, financial institutions which are giving money. So it is getting a home loan is relatively easier and the cost is lower. I think that is one of the reasons why the residential market will pick up, because if the home loans come down, it makes lets a lot of more people to buy property. So I think the lower of interest rate, in fact, anywhere globally, when the interest rates fall, that does trigger a demand for residential. Of course, there are many other aspects, but if you really look at, if you go back in India also, the first big push into residential sector in India came in when we had lower interest rates going down as low as 6.5% at one time, that really developed the residential market in India. Till that time, we really didn't have a large residential market, and spurred demand because suddenly the age group of people buying houses plummeted from 50, 55 to even in late 20s and 30s, and that really, again, so with interest rates coming down is a very good sign for the residential market.
Okay. A quick question then on REITs as well. We've had quite a few of them being launched recently. The IPOs were conducted of quite a few, Embassy being one of them, so on and so forth. Is that a good way for individuals to invest, to get exposure, to real estate?
In fact, personally, been waiting for REIT, been talking about it for more than 18, 19 years. And finally, as you know, the first REIT of Blackstone Embassy came in, and now, the second REIT from the Rehejas have also has been launched. And it's a fantastic thing for the real estate industry as such, because like you rightly said, that there are retail investors, individuals can buy into commercial real estate, which is generally expensive. The best part of REIT is that it provides you that most of the income of a REIT has to be dividend out. So that means if you buy a REIT unit, you will get income every year. So it's an income producing instrument. And as you see overall, the bond rates have come down. The fixed deposits interest rates are down. So REIT provides one more opportunity for individual investors to buy into an instrument which will give them income, regular income. Plus, it is backed by a real asset with there will be an office space. So it's a great instrument to invest. And of course, REIT itself it shows maturing of our real estate market, and gives exit to a lot of investors who are putting in money. These are large funds or institutional money which is putting money into development, and they have a REIT structure to buy that office building or a retail development. So certainly for individuals and for the real estate market is fantastic.
Okay, great. Mr. Magazine, really appreciate you joining us today on ET Now and talking to us about a plethora of issues. Starting off with, for landlords, this is the time to invest in your existing relationship with your tenants and strengthen their longevity, because unfortunately, things are still a bit tricky. Many tenants are still facing cash crunch issues. It may not be very easy to convert your regular residential property into commercial or into a service apartment, but one option is shared accommodation. And yes, Mr. Magazine is also a big propagator of REITs. He's been very bullish on them for some time. So yes, watch out for that. We've had a second one, the Mindspace Business Parks REITs as well, which by the way did see massive oversubscription, indicating that investors as well are very confident about the future of this product. Okay, on that note, we'll wrap it up on this episode of The Money Show. Many thanks for watching. Don't forget to stay connected with us via our email address, themoneyshow@etnow.tv.